liquidity hack that you must know if you want to win trades. So here we are on the 15-minute time frame so that I can give you the full understanding and background of this trade and this strategy. With that being said, our first and most important thing is to understand market structure. So very simply put, just take the most recent high and the most recent low, and that is the range, right? Mark up the previous high if it's bullish or the low if it's bearish. In this situation, we are bullish. So that right there is our break of structure to the upside. So now that we've broken structure and we're ranging from this low to this high, it's pretty simple. Because structure is bullish, we're just expecting a higher low and then a higher high. Something along the lines of this. So we just need to wait then for our confirmation, a point of interest to get involved in this market. Now, the first thing that you'll see is, if you've been watching our videos, is this order block right here, which is our demand zone. This is the pivot created demand that caused the break of structure. But here's something that's interesting. There's actually this gap in the market right here from the weekend. And on top of that, if we turn on our Asian session range indicator, which you can go to by going to indicators and typing in Asian session range, selecting FXN Rob Minty, that is what I use, and then adjust the times to the times that are correct. So with that being said, we understand the concept of liquidity. The market has one purpose: to gravitate towards areas of liquidity. So we have to understand, well, where is the liquidity? The liquidity in this example is right below the Asian session low. There are plenty of orders at that level, both stop losses and sell stops. So when price breaks this level, you'll see breakout traders entering into short positions. You'll also see that because price has broken structure from here, you'll see that there'll be continuation traders getting involved in this market, putting entries in and essentially looking to ride the wave up to the highs and covering just the lows. So we know there's a large amount of liquidity, and there is always liquidity at the Asian session low and high. If you've been watching our videos, you'll know that oftentimes price will run one side of the Asian session before then running the next side. So we add that as another confluence to our already perfectly understood market structure, and then you have a thesis to understand where to get into the market. So what I'm waiting for now is confirmation. I'm waiting for a sweep of the Asia session lows. Then I'm going to go to the 1 minute time frame when that takes place. And from there, we're going to wait for price to shift structure. So now you can see London opens and we start inducing the sell side liquidity. When London opens bearish, there's going to be lots of people that will be looking at this as London opens and thinking to go and play short. What does that mean? That means that all the sell stops and all the liquidity down here is going to be taken. But not only that, it also means that now there is going to be stop losses at the Asia session high and also breakout traders, correct? There's also this area of liquidity in here, which is known as, a trend line or resistance. We also have equal highs in here where price just comes into this level and bounces off it multiple times. These are the things you need to be identifying if you want to seek out liquidity. So with that being said, just understand where is the liquidity, and it's likely that the market will gravitate towards that area. So that's what we've done. Wait for one side to be taken first, which has just been taken, sell side liquidity, and then wait for the reversal. The reversal that we use comes from the 1 minute time frame. So when we come down to the 1 minute time frame and swept the Asia lows, so all the liquidity has been taken. Now all of the liquidity is at the highs. So we want to look to get involved in the market. We already know that our overall target is the Asia session high because it's an area of liquidity. But not only that, it's also a structural target because the 15 minute is bullish. So this is the 15 minute high that we're waiting for to be taken out. That's how we're going to target this trade. Now, how do we get into this position? Quite simple, actually. Essentially, what you're going to look for first is cause and effect, which is the liquidity. So we have liquidity built in here, buy side liquidity. Mark out all of your areas of liquidity. We have this in here, which is, resistance to most people. So we're going to mark that out as liquidity. And then there's, of course, as we know, this huge trend line liquidity that is forming. So much liquidity to take out of the market. And now all we want to do is understand that the banks and the algorithm, the interbank algorithm, is going to go and collect those orders because all the sell side orders have been collected already. So we're waiting for a shift in structure. Because the 15-minute is bullish, and as the 1 minute comes down, the 1 minute is going to be bearish. So what we're waiting for is a shift on the 1 minute time frame to realign with the 15-minute. Once the 1 minute is bullish inside of the 15-minute that's bullish, then we can simply just expect the continuation. And that is essentially fractals, right? So with that said, we need to understand what is the market structure of the 1 minute time frame. So when you come in here, you can see that the previous low was here, the high was here, price puts a low, pulls back, lower low. So there we have our break of structure to the downside. We'll just mark that up. The low gets broken, break of structure down, and the high that breaks it is right here, right? This is the high, pushes up, pushes down. Price then breaks structure, pulls back and breaks structure again. So now we have a new break of structure and a new range to look at. So price takes out the lows down here, which is another break of structure to the downside. Now we are ranging from where? The low that was just created and the high that created the low. So what we need to see to understand the 1 minute has shifted bullish, because at the moment it's still bearish, is gonna be a break of this level, which would be known as our change of character. The change of bearish price action to bullish price action, aligning with the 15-minute time frame. So we just let that play out now. You can see price pulls back, makes a new high, and there we have it. So price does something like this: lower low, lower high. When this lower high was created, we was expecting a lower low, but price failed to do that. That made us assume that this is weak, and it got run. And then we have our change of character. So when the change of character happens, change of character up, now we need to understand, where are we ranging from? Where are we ranging from? We're ranging from the low right down here to the current high right up here. So we need to take a trade within that range. Now, when I look at this, what I like to do is get the Fibonacci tool and draw out premium and discount. So the bottom 50% is what we call discount pricing, and the top 50% is premium. If you're buying, you want to be buying in the discount, and if you're selling, if you're going short, you want to be selling in the premium of the price leg. So we want to look for an order block or a demand zone inside of this blue area. And where is it? Yeah, exactly. It's right here. This is our demand range. Cover the wick as well, and then remove this. So now we know exactly where we are taking our trade from. And we're going to place our stop loss just below with, let's give it a little bit of room to breathe, with a 4.5 pip stop loss. Now, the question is, where is our target? So the first one is going to be when we come back in here, like so, and break the highs, that is going to be our sign to go to break even. That's how we're going to be managing this position. But from a target perspective, let's just zoom out again and understand where we think we're going to be targeting. So if price is bullish, which it is, then what are we expecting? We're putting this, higher high, higher low, higher high. It's just logic. It's just structure. Very, very simple. So we're going to be targeting this high right here, which is a 1 to 18.98. So 1 to 19. Turn on your Asia session range. What do you have? You have London session high currently, and you have Asia session high. 2 areas of liquidity. So look around at this picture and understand, where is all of the liquidity? All of the liquidity is sat in this level here. So that's where price is going to go. So you have the confluences, you have the market structure, you have the liquidity, and now you have your entry and your confirmation from the 1 minute time frame. And that is how we're piecing this whole puzzle together. And this is exactly what we do day in. So let's take a look at how this plays out for real. So you can see price tags in and kind of gravitates for a while, and that is the point in which we will go break even. So when price breaks this right here, we can move our stop loss to break even. So now we know this is a risk-free trade. With that being said, play out. Don't worry about if it comes down or comes up. Just let it do its thing. We're playing based off logic, and we'll be creating a new channel soon to go over trading psychology for sure. So guys, with that being said, that is the full trade breakdown. I hope you guys did enjoy. If you did enjoy, subscribe to the channel and check out, we've just opened a couple of new spaces in our premium program. Link is in the description.